Hi everyone. So usually I kick the video off a little bit early and then I go ahead and wait a couple minutes for people to join. But today I'm starting right at 8 o'clock and I'm just going to go ahead and jump into the subject matter and hope that people join in or tune in a little later. Okay, so this week is episode 4. Thank you guys for joining me on this journey learning about insurance. This is episode 4 of What the Insurance. In episode 4, we'll focus on the next major medical plan, which is the high deductible health plan, or HDHP for short. Before I jump into the components of this plan, I do want to call out that most of the time you will hear this plan used interchangeably with what we call an HSA or health savings account. And even though they walk hand in hand, they are not the same thing. The health savings account is actually a savings account with a bank. The high deductible health plan is a medical plan. So today we're going to focus on the high deductible health plan and the components related to that. And then next week we will journey into the discussion related to savings accounts, and we'll talk about health savings accounts and flexible spending accounts and all of those fun things. So for the sake of discussion today, we're going to focus on the high deductible health plan, or the HDHP. Okay, so on this plan, just like with the PPO, you are not required to choose a primary care provider. So you don't have to pick a doctor and be stuck to that doctor. You can move around as long as you stay within the network. And even though you do have access to go outside of the network, also like with the PPO plan, it's going to be better for you to stay in network because you'll get the best bang for your buck, like we talked about in last week's episode. So you don't have to pick a primary care doctor. You also are not required to get a referral when you need to go for a specialist visit. So unlike the HMO, you have a little bit more freedom on the high deductible health plan where, again, you can move around within the network and go to different specialists and you have that freedom. The other thing to note that, again, like with the PPO and with the HMO plan, you may have to get a prior authorization for specialty services like surgeries and things like that. So you want to check with your doctor and with your health insurance to make sure that if you're going for a surgery or a hospital stay, that you cover the prior authorization basis. Either your doctor does it or you do it, but you don't want to be caught without that. So you can see there are a lot of similarities between the PPO plan and the high deductible health plan. So I'm going to, for the sake of time and to not sound redundant, I'm going to try to focus just on what's different with the high deductible health plan versus the PPO plan. Okay, so with the HDHP, you will likely pay a little bit less out of your paycheck each pay period than you would with the PPO plan. Why is that? Well, typically it's because you're going to pay more at the time of service, so you'll pay less out of your paycheck. That means your deductible on this plan is higher than it would be on a PPO plan, hence the name high deductible health plan. So this plan is, like I said in the beginning, tied to the health savings account, or HSA for short, which we'll talk about next week. But because it's tied, the government regulates, or by government I mean the IRS, regulates the amount that can be put to this plan as a deductible. So there's a minimum amount that has to be charged as a deductible on this plan so that it can be compatible to a health savings account. Because that health savings account is going to allow you to put money away pre-tax that you can use to cover the cost you incur on this plan. Again, we'll focus on that stuff later in the next episode. However, because of that, because the IRS knows you have that money that you have put away into a tax-favored account, then it gets to regulate how much money you can put in the account. It gets to regulate what your deductible is going to be on that plan, at least what the minimum is. Then it gets to regulate how you spend the money in that account. So that deductible on the plan is going to be higher. The other thing to note on the high deductible health plan is that there are no copays. So you are required to pay everything upfront, 100%, until you meet your deductible on the high deductible health plan, okay? Everything paid 100%. I repeat, no copays on the medical plan. There may be copays on your prescription drugs, but that usually will kick in after you've met your deductible. Then you may or may not have prescription drug copays after that. But there are no copays on the medical benefits. That means if you go to a doctor's office visit, you are not going to be charged a copay at the time of service on the high deductible health plan. But you also usually are not going to be charged the full amount of the doctor's office visit when you go in, okay? So here's a tip, because I know a lot of people have shied away from trying out the high deductible health plan because the fear that I hear the most is, what happens if I get hit by a bus on the second day of my plan? Or what happens if something major occurs right after I sign up for this plan? I don't have any money in my health savings account. Well, here's how you work the system, I like to call it. So you know you're going to put money away pre-tax out of every paycheck to go in that health savings account. Again, we'll talk about that next week. Hold tight. We'll get to that. But I'm giving you a hint. You're going to have money put away every pay period into that account if you elect to do so. So because you know that, most hospitals and doctor's offices will allow you to put your bills on a payment plan. What you can do is give them the card number for your health savings account and then allow them to take it out automatically. You don't even have to worry about it. As long as you know the money is in your account, they can take it out automatically. So if you do incur that major situation at the beginning of the year, it's okay because you know over the course of the year that money is going to accumulate and then you can pay that bill. So they don't require you to pay that whole amount of the hospital stay or the whole amount of the doctor's office visit up front when you're waiting in the waiting room, like you would have to pay if it were a copay. But they will submit the bill through your insurance, just like on a PPO plan. Your insurance will apply as discounts. Your insurance will apply your deductible, and then you'll get an EOB and a bill from the hospital, and then you can compare. And once you confirm that you owe that amount, you can put that on a payment plan and use your health savings account to pay it on a tax-favored basis. So that's a tip. Don't be afraid to try the high deductible health plan because of the high deductible or because there are no copays. There are ways to work around it so that you are not incurring that major bill right out the gate. Okay, so 2 things to note. If you are on a high deductible health plan, there are 2 kinds of deductibles. Now, these deductibles do kick in sometimes on a PPO plan as well, but you're going to see the difference between the 2 mostly on a high deductible health plan. There is an embedded deductible and an aggregate deductible. So an embedded deductible means that there's a family amount that has to be met. There's a total family deductible that has to be met. If you have an embedded deductible, that just means that you, as a person, only are responsible for meeting your individual deductible before the rest of your benefits kick in. So that means, let's just say the individual deductible is $2,700 and the family deductible is $5,400. Arbitrary numbers, this is just meant to be an example. If you're a family on the plan and you meet your $2,700 out the gate, the rest of your benefits kick in. Whatever the co-insurance is, which in a lot of cases would be paid at 100% after you've met that deductible, or whatever the benefits is, are after you've met that deductible, that's going to kick in for you by yourself, meaning your spouse or children may still have to meet their deductible, but you don't have to wait for them to meet their deductible in order for your benefits to kick in. If it's an aggregate deductible, then you do have to wait for them. So that entire family deductible, or in this example, the $5,400, would have to be met before benefits kick in for anybody on the plan. So important to note, make sure if you're interested in this plan that you talk to your HR to find out, okay, what kind of plan is it? Is it an embedded deductible or aggregate deductible? Because that's going to make a difference in how your plan works for you. So ask my husband, Robert, we experienced this recently because we're on a high deductible health plan. And I met my deductible at the beginning of the year. Many of you, if you saw my testimony on Facebook, you saw I had some issues going on at the end of last year, the beginning of this year. So I met my deductible pretty early in the game. So after about March, I was able to start having some services covered at 100%, while my husband still has to meet his deductible. So he was kind of jealous of me for that. But yeah, so you want to make sure you ask or inquire about, is it embedded, is it aggregate, because that's going to be important for how your plan works. Okay, the other thing to note on the high deductible health plan are prescription drugs. So remember I mentioned everything is paid out of pocket, out of your pocket at 100% until you have met your deductible. That means your prescription drugs. So whereas on a PPO plan or HMO plan, you may be used to paying like a $10 or $20 copay. On a high deductible health plan, you're going to pay the cost of whatever that is. And sometimes pharmacies have discounts that are even less expensive than what a copay would be. But you're going to pay the whole cost of what that is with the discount out of pocket until you meet your deductible, and then your benefits kick in. So when I say benefits, meaning you may have copays after you met your deductible, or your prescriptions may be covered at 100% after you met your deductible. But whatever that is, those benefits will not kick in until you've met your deductible. So that's important to note. You don't have those copays out the gate like you would on a PPO or HMO plan on a high deductible health plan. Okay, like with other plans, the generic tier is usually going to be the least expensive tier. So it's very important that you're asking your doctor if you can try the generic, if they have one available, because especially when you're paying everything out of pocket up front, you do want to try to opt for the least expensive tier so you can save that money. All right. Like with most plans, there are going to be more comprehensive levels to your benefits, right? This is just meant to be a high-level video just to give you an overview of the plan, how to use the plan, how to benefit from the plan, how to save money. That's been my ultimate goal this whole time. So I want to make sure you guys are talking to your human resource department, that you're getting your certificate booklets, that you're getting your summaries of benefits and coverages, that you're checking to make sure you understand the details in your plans before you choose them and pick them. And again, if you have any questions, you can feel free to send me a message. You can comment on the videos. I do check the comments, and I can help. Feel free to reach out if you have any questions about your specific benefits. Before I close, there's one thing I want to call out with this high deductible health plan. So if you're watching, listen to this part. This is the most important part here. Okay. On a PPO plan and an HMO plan, you guys are going to spend money on your premium every month. That's going to come out of your paycheck. That's the cost of your insurance, right? And then you're going to pay your deductible. You're going to pay your copays. At the end of the year, if you have not had a bad year, if you have not gone to the doctor a whole lot, if you have not had any hospital stays, that money is gone. You've paid for your insurance, and that's great. You had insurance, and you were covered in the event something did happen. On a high deductible health plan, you're going to pay that same. You're going to pay your premium again out of your paycheck for your cost of insurance. But then you're going to put money into a tax-favored savings account. Again, we will cover what that means next week, so stick with me. But hear this. You're going to put that money into a tax-favored savings account. Guess what? If you have a good year and you don't go to the doctor a lot and you don't go to the hospital, that money rolls over and it stays with you. So yes, you're still going to pay your premium for the cost of insurance, but you have this outlet that allows you to also put money away into a tax-favored savings account where that money rolls over and it grows with you. I don't want to give away all the juice because next week we're going to talk about the health savings account, and you'll really get to see how it works. But I wanted to call that out with this high deductible health plan. That's one of the biggest differences between the PPO and the HMO and this high deductible health plan is with this one, you get to have that health savings account where that money rolls over, it stays with you, it grows with you year after year. If you leave your job, you still can keep your savings account, and you still have that money that's on a tax-favored basis, and I'll explain again what all that means next week. But it's just important to know. That's one of the big differences, so take that tip if you don't take anything else with you. Okay, thank you guys for joining this video. Again, this is just meant to be high level. There are probably going to be more comprehensive details related to your specific plans. If you have questions, feel free to reach out. All videos will be posted to YouTube. Also, follow me on Instagram at what_the_insurance. I'm posting the archive videos to my IGTV channel, as well as other information that I may not post on my Facebook page that you will find on Instagram. So if you're on Instagram, follow me on Instagram. If you're not on Instagram, but you want to watch them on YouTube, check out the YouTube link in the description below. Like and subscribe. Videos will be posted there as well. Catch me next week, and we'll be talking about the health savings account that I've alluded to in this whole video. So you guys should be excited about that. But yeah, thank you for joining in. Have a great rest of your week.